Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. The top headlines at this hour. The uptrend in Indian markets continues. Sensex hits new fresh highs in opening trade. India VIX declines. And open interest surges in JSW Steel and Asian Paints on the back of earnings as traders take fresh positions in their respective stock futures. India's largest stock exchange, NSE, plans to extend derivatives trading hours till 11:55 p.m. subject to regulatory approval. Larsen & Toubro, Bharti Infratel and Hero MotoCorp are the nifty companies that will report their June quarter earnings today. And a Bandh call by the Maratha Kranti Morcha threatens to bring Mumbai and its adjoining areas to a halt.
All right, those are the top headlines at this hour. Let's also tell you what's happening on the penultimate day to the July series expiry, which is lined up for tomorrow. So it's been a flat opening, so to say, at least for Nifty, which is just about trading around the levels of 11,130 right now. Bank Nifty has seen a bit of weakness today. That's down nearly 11 points. So the India Volatility Index this morning has been a little bit flat. I guess last when I checked, it had seen some bit of correction. Yep, it's down almost 0.5% at levels of about 12.4. Let's check what the broader market indices are doing, because they too have inched higher in the last 2 to 3 trading sessions alongside with the benchmark indices. The Nifty mid cap as well as the small cap index are right now at least outperforming, so to say, the benchmark. Small cap index is up almost 0.5%. In terms of sectoral indices, you've got the Nifty metals index. That's the top sectoral gainer, up almost 1.5%, and IT is the laggard, down almost 93 points in trade today. I believe that could be because of Hexaware, which has reacted negatively after it posted its numbers yesterday. Well, what are the concerns for this market at these higher levels? We'll check with our experts whether we can touch the all-time high level or not. But look at the PCR, that's at 7-year high. I'm talking about the Nifty put call ratio. It's the highest level that we've seen of 1.89 since March 31st, 2011. So it is indicating that the market could be in an overbought territory. If you look at the options data, what range can one expect for tomorrow's expiry? The maximum open interest, actually, if you see on the put side, it is at 11,100. Can we expire above that level? It looks likely as of now, because we've seen more of put writing in the system coming about, and as of now too, 11,100 put has seen open interest addition of 2.5 lakh shares. Some unwinding also seen for a couple of options call strikes, but addition has come in for higher level strikes like 11,200, also 11,150. July series so far has panned out good for the markets. If you look at Nifty, it's up almost 5%. If you look at the points, it's up 550 points so far in the July series, and Bank Nifty has given you returns of nearly 3% so far. Agam, what about the stock futures?
Well, no prizes for guessing, Navneet, but it is going to be all about earnings. Asian Paints is one of the stocks which is gaining substantial traction in the F&O space. But and there you have it. That's the 14% added in open interest. This is the July futures. Of course, August is also seeing substantial increase. But excuse me. Right at the top, you have JSW Steel. That's advancing, longs building up, even as the underlying advances by around 2.5%. It's the same for MCX India. Again, a lot of strength coming in. MCX up 5%, 17% at an open interest. Look at Asian Paints. Asian Paints inching towards the mark of 1,480 right now. Can we expect 1,500 in the near term? We're going to pose that question to our experts as well. But for now, we are seeing substantial addition in OI. Muthoot Finance is the only one in that list which is looking at a decline, even as we see fresh shorts added, and Nalco, of course, up to around 2.3%, 12% added in open interest. Let's take a look at stocks which are seeing unwinding, and Reliance Power is right at the top. It's followed by Allahabad Bank. We must remember that we are looking at expiry tomorrow, so that's probably the reason why we're seeing such a surge in the unwinding activity as well. So Allahabad Bank, CG Power, Syndicate Bank as well. But I'm going to watch out for Asian Paints today, along with something like a JSW Steel, because we have seen so much traction. Let's not forget MCX as well going into today's day of trade, Navneet.
Okay, so a whole host of stock futures to keep an eye on. But before we get some views from our experts, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on the number which will be flashing there on your screen, 022454011. You can also write to us on our social media platforms, Twitter, Facebook, and also YouTube with AskPQ hashtag. Well, it's time for us to get our F&O experts on board then. Ashish, Chaturmohta of Sanctum Wealth right here in the studios, and K. Subramanyam of Altamount Capital are there with us. Good morning to both of you, gentlemen. Ashish, coming to you. Well, we're watching out for all-time high levels, definitely on Nifty, just few points away from there, 11,171. But does it worry you that the PCR has inched to levels of about 1.89? In our previous discussion last week, I think you were mentioning that anything above 1.7 indicates an overbought territory.
Sure. So good morning, Navneet. Yes, definitely, the put call ratio is completely in an extremely overbought zone, and generally we have seen a put call ratio above 1.7, 1.8, indicating some nervousness or cautiousness into the market. But one more thing is that since if you look at index, it has been consolidating for almost last 5-6 months, and after seeing a sharp cut towards 10,000 odd levels, we have seen a complete U-shaped recovery coming into the markets. And I believe that since the markets are near its all-time high, it looks very difficult that you might see a very significant sell-off at these levels. So generally, what can happen is a time correction rather than a heavy price correction. I believe that 11,000 is going to be a key support zone for the market, because if you look at the put writing even in this series and also going forward in the August series, there is a considerable amount of put writing being seen in Nifty, and at the same time there's a clear shift happening from 11,200 call option to 11,400 kind of strikes in the August series. So that gives me a sense that somehow market might try to build some base at these levels. Definitely put call ratio is in an overbought zone, but looking into the broader perspective, I think there can be some consolidation which might take place rather than some significant profit booking, because when we see technicals, generally we see that whenever the previous all-time high gets hit, after consolidating for a considerable amount of time, the chances of it not breaking or crossing that high is very, very low. So I'm of the belief that one should keep a positional stop loss around 11,000, and if these levels are not broken, you might see 11,250 to 11,300 kind of levels in next couple of few trading sessions.
Of course, for those who are keeping an eye on the put call ratio at around 1.8, Ashish, I believe that this number will also drastically change irrespective of levels once the expiry comes through, because once those options expire, this ratio will change.
So that's why I said that because it is happening near the end of the series. So the importance of this put call ratio, we have to see how it happens post expiry. So maybe day after tomorrow's data will really give a right picture of how the put call ratio is behaving or working on it.
All right. Well, we also have Mr. K. Subramanyam who's joining us. Mr. Subramanyam, good morning to you as well. How are you reading these cues when it comes to the indices, and what's your take when it comes to the expiry at this point in time?
Good morning, Agam. I broadly agree with Ashish. I think we have seen some sort of profit booking coming up at higher levels. But one thing I would like to add is that last couple of days, one heartening feature of this market is that the advance decline ratio, that is improving. So that's a good sign that there was a general sense in the market that though the index was touching all-time high, nearing the all-time high, the small cap, mid caps were not performing. But I think we did see some sort of resurgence coming about in that space. So that will bring a lot of hope to the market participants. So we could see some sort of consolidation around these levels of 10,800, 11,000, and some correction here and there probably should be welcome for some fresh entries. So yes, currently, and some of the one space which I would be clearly watching out is probably the PSU banking. That's this area where we have seen some pretty good buying coming about, and in contrast, the private sector banking peers appear to be seeing some sort of so the trend now clearly seems to be changing, the sense that some of the private banks are seeing some profit taking and the PSU banking pack seeing some buying. So interesting times ahead, and I think gradually we should see go past the all-time high, and but whether it will happen this series or not, I don't know, but I think odds are very high that it will happen sooner than later.
Okay. as we brace ourselves to see those all-time high levels on Nifty today or tomorrow, let's see, maybe in the next 4 to 5 trading sessions. A point well taken, Mr. Subramanyam. The advance decline ratio had seen significant improvement yesterday. It was 4:1, and today also, if you could just pull up the advance decline chart there on your screen, that shows you a clear picture of the listed universe on NSE. It's almost 2:1 right now. But that's the bullish view coming in on the indices. But how to play through the options? Mr. K. Subramanyam today has a bull spread strategy for Bank Nifty. Before we proceed, let's tell you exactly what that means. A bull call spread is employed when one expects a moderate up move in a security. Well, in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Mr. Subramanyam, over to you. Tell us about your option strategy.
So Navneet, what I am recommending is buying of a simple 27,000 strike call and also correspondingly sell at 27,300 strike call. This is a weekly expiry for the Bank Nifty tomorrow. So obviously we'll have some volatility, fast erosion of premiums. So bull spread always gives some cushion against the time erosion. So I think the net cost comes to about 100 in this strategy. The maximum gains that one would make is 200, and but also recommend a stop loss of 50.
All right, there you have it. That's the bull call spread when it comes to the index. But Ashish, I know that you have a long on futures currently. Would you recommend going and buying calls on the Nifty as well at this point in time?
Yeah, so that would be a safe strategy. In fact, buying a 11,100 call option of August series makes a lot of sense with, so I'll give a stop loss of Nifty, so 11,000, as I mentioned, is a critical support zone. So keep that as a stop loss for the same. If Nifty breaks 11,000, then I think one should try to take an exit in that 11,100 call option.
Okay, that's Nifty for you, but let's also get you some strategy with regard to some stock futures in today's trading session. But I think Mr. Subramanyam has strategy he has stock option strategy. He's got a covered call strategy for his picks that he will be highlighting for us. But let's tell you what a covered call is. It's a strategy employed when an investor holds a near-term neutral view in a security. This involves selling a call option of the asset in which the investor has bought securities. Okay, Mr. Subramanyam, coming to you, what are your stock option strategy for the day? I think you've chosen a strategy called covered call on Tata Global Beverages and also on Canara Bank.
Yeah, as I mentioned, the PSU banking space is the one which is seeing a lot of action, and I mean the frontline ones like of SBI, Bank of Baroda, Canara Bank seem to be leading the charge. So one could possibly do buy August futures of Can Bank and also corresponding sell a 270 strike call, keeping a target of 275, and maybe one could keep a stop loss of 245. And the second was a covered call on Tata Global. Now this has seen some pretty severe breakdown in the July series, but close to the levels of 235, 240 seems to have found some good support. So some bounce back is well on cards, and it is on the long-term charts has been outperforming stock. I think lower levels will attract a lot of buying. So, but one could possibly again do a covered call. Buy August futures, sell a 260 strike call, keeping a target of 260, and recommend a stop loss of 240.
All right, so those are two covered calls, one on Canara Bank and the other one is on Tata Global Beverages, of course, with the bias of a positive for some of these stocks. But Ashish, what stocks are you looking to trade in today's day of trade?
Yeah, so my first call would be on HDFC Limited, seeing a very strong OI build up in last couple of few trading sessions, have seen a good amount of rollover in the August series, and I think with HDFC AMC getting listed into the markets, you might see a lot of renewed buying interest coming back to these names. So I think HDFC Limited is poised for a strong move towards 2050 zone, so one can initiate a long at current levels with a stop below 1970 for an upside target of 2050, 2060. Second call would be on Arvind Limited. Yesterday we have seen a very strong price volume breakout happening in the stock. In that session we have also observed a good amount of OI buildup, clearly indicating long accumulation happening. There's slight profit booking in today's trading session, which is offering a good entry point. So I think with a stop below 418, Arvind Limited is a buy at 420 426 for an upside target of 455 levels. I think Godrej Industries in the FMCG basket is looking very strong, with a very strong rollovers in the August series, and you are seeing Godrej Consumer Products trading at an all-time high. So I think there will be a catch-up rally happening in Godrej Industries as well. So with a stop below 605, Godrej Industries is a buy for an upside target of 665 zone.
Okay, so those are some long calls coming in from Ashish today. Let's also take a look at some of the stocks which are buzzing. Let's just pull up MCX. I'll take a view on that. Agam highlighted in the stock futures today. And also, I think we've got a query also from Ujjwal, who writes to us on YouTube. He's got 4 lots at 774 for intraday trade, and he's now suggesting the price is 805. He wants to know if he should book profit or he should hold on to his position today. Ashish, coming back to you, MCX spot at 774. It's buzzing in today's session. Do you think he should be booking profits or trail stop loss, wait till tomorrow?
So I can provide a trail stop loss. I think 792 is what I think that should be kept as a trading stop loss, because if you look at in today's trading session, huge amount of OI buildup is there, and if there's a follow-up action, then the stock might eventually test 830, 835 zone. So to ride that trend, I think 792 should be kept as a stop loss.
4 lots. Would you suggest booking partial profit?
Yeah, so I think yes, partial profit booking is definitely suggested, and I think for the rest, you should keep 790 to 93 as a trail stop loss.
All right, then we'll take more queries, and let's start off with one on YouTube. We have one from Rajdeep Anand, and his question is on the ICICI Bank futures, which he has bought around 273, 274 odd levels, and this is the August futures that we are talking about. Mr. Subramanyam, how are you reading ICICI Bank futures at this point in time? Are we likely to see an up move, and what would you recommend when it comes to the viewer in terms of levels that he needs to keep an eye on?
Well, a broad underperformer, and in the wake of some underperformance that we have seen in some of the private banking peers like of HDFC Bank, IndusInd Bank post results. So a bit of caution, and I think results also around the corner. But the stock did see some sort of short covering from lower levels. So I think downside is more or less limited. But to be on the safer side, since we could see some sort of volatility coming about, I would recommend a stop loss of maybe around 267 thereabouts. I think that could be a safe stop loss, and on the upside, well, the stock has not shown any signs of any remarkable outperformance as such, but any upside could probably take the stock up to levels of 285, where you could book the profits.
Okay, that's about ICICI Bank. On Facebook, Ram Hegde has written to us. He wants views on M&M August futures, and he's also asking if there is any specific target that one should watch out for with regard to M&M. Ashish, any support or resistance or a target level that you can advise Ram to keep an eye on?
So we are quite positive on Mahindra & Mahindra. If you look at, the stock has been consolidating for last 7-8 weeks in a range between 930 on upside to almost 895 on downside. So keeping that in mind, 895 is a very crucial support level. But if someone doesn't want to keep that deep as in stop loss, then I think ideally 904 should be kept as in trading stop loss. These are spot levels, and if these levels are not broken, I see a possibility of Mahindra & Mahindra crossing this previous all-time high, and once that happens, you might see a move towards 955, 960 zone. So technically speaking, another 35 to 40 rupees kind of upside from these levels could not be ruled out in Mahindra & Mahindra, and for that I think 904 should be kept as an trading stop loss.
All right, well, on YouTube we have Bikash Pekare. His question is on Bajaj Finance. Let's pull that one up because we have been talking about that quite extensively. He has bought a lot of Bajaj Finance 207.50 call at 41. This question is straightforward. What should I do? Ashish, we've been talking about Bajaj Finance, so why don't you take us through this one?
So as I mentioned, Agam, last time also, that these are all structural trends, and they are mostly driven. So definitely a technical factor will definitely suggest something, and even a derivative positioning. But look at the results these companies are posting. So a 30% growth. When the entire NBFC is not showing that kind of traction, you will see this kind of upward trajectory coming into these names. Look at what Bajaj Finserv was just a month back. It was 6,000, and today it is almost 7,100. So I think these are structural trends. If he has bought 2750 call option, I think he should keep 2710 as in stop loss. But definitely the structure is good. So there's a possibility stock might cross 2820, 2830 zone.
All right.
Okay, that's about Bajaj Finance. Bajaj Finserv and Bajaj Finance have had a stellar run post the earnings. Okay, I'm going to come to you on Yes Bank, Ashish, because I've got a query too on that one. Somil has written to us. He's bought Yes Bank July expiry at 385.5. Can we just pull up the futures? And he's also got a query on the Adani port. But let's first address Yes Bank. He's asking for how long should he hold, considering tomorrow is the expiry. 385.5 is where he bought, currently at about 389.
So if he's looking, his question is for July series. I think 394, 395 is a level he can expect in July series. But I have a positional view where I believe that Yes Bank has a potential to cross 420, 425 zone over a period of next 1 to 2 weeks. So I think if he can carry or roll over his contract, then I think the targets could be in a range of around 420, 425. And I think tomorrow, I think today or tomorrow is a result. So you know, but that will also take a call. So because there is a result, I would like to keep an trading stop loss which is around 378, and if these 378 levels are not broken, I see a strong possibility of Yes Bank hitting 420, 425 levels.
All right. Okay, so we have another interesting query on well, Twitter, if I'm not mistaken, Sandeep Patil. Now, this query is to do with the cash markets, because he talks about 100 shares of Jubilant FoodWorks. But considering we are looking at the company announcing its earnings later on today, well, I reckon it would be prudent to, you know, at least address this with a futures and options point of view. So it's currently trading at around 1457. Sandeep Patil's entry price, if I'm not mistaken, is 1455. In fact, around about these levels. Let's also pull out the futures and see if we're seeing traction in the July futures, perhaps the August futures. So we can pull up the rollover data as well and take a look at where the Jubilant FoodWorks is currently trading at. That's your July futures. It's also seeing an increase of around 5% in open interest at around 1458 odd levels. Of course, August OI also increasing. Mr. Subramanyam, how would you advise people to play Jubilant FoodWorks at this point in time, keeping intraday in mind, considering the company's also announcing its earnings, perhaps even considering the technical levels at this time?
Well, I think this is one of the very highly volatile stocks, particularly during result times. We have seen these stocks gyrating, more than 10%. I recollect even last few quarters this has happened repeatedly. But more often than not, it has been on the positive side. But we have also seen the negative side of this stock, I think, a few quarters back. So I would definitely be advise the the stock holder to be a bit cautious, and probably you could put a stop loss of around 1410 thereabouts. But if he's making even a nominal profits, I would advise him to book profits and stay on the sidelines, because this is one stock which could exhibit a lot of volatility post the results.
That's about Jubilant FoodWorks. Watch out, the numbers come out today. Let's take Ujjwal's query. I think he also had a query on Bank Nifty 27,100 put, which he's purchased at about 109. Let's just pull up the 27,100 put strike and see where the current premium is. I think it has gone up from at least his buy price of 109. I'm not too sure about it. Let's just pull up that one. Ashish, what would you suggest him? Should he just exit his position today or wait it out?
So I think Bank Nifty.
I think the current premium is somewhere about 145 to 50.
Yeah.
For that
okay.
one.
So I think Bank Nifty, we have a positive view. I think it's in a consolidation phase, but eventually we see a possibility of Bank Nifty crossing the recent resistance zone of say 27,250, and once that happens, it will also try to test the previous all-time high. But definitely in a very short term, we expect Bank Nifty to at least deliver 200, 250 points from these levels, and for that I think 26,900 is a stop loss we are keeping. So I think if he's on the long side of the call option, he should continue this with a stop below 26,900.
All right, there you have it. That's the view coming in on the Nifty Bank. But we're going to address earnings. Symphony is trading with deep cuts in today's trading session after reporting a weak set of numbers for the June quarter, with profits dipping by as much as 49%. What have been the key factors right now weighing down the quarter? Let's address this with the management. Joining us on the phone line is Executive Director Nrupesh Shah. Hi, Nrupesh. Good morning, and thank you so much for joining us. Nrupesh, firstly, I know that the entire entire industry has been reeling under pressure, especially when this is one of those key months when you have your sales peaking out. What is it that's actually bearing down on sentiment right now, and what can we expect? What kind of impact can we expect from your consolidated numbers on FY19 going on?
Yeah, so as you know, we have published for quarter also consolidated financials. So in the respect of consolidated financials, top line is down from about 190 crore to 145 crore. EBITDA is almost half from 47 to 23, and PAT is almost half from 39 to 20. Now, if we look at in respect of domestic business and in respect of international business has remained intact and it is strong and solid. As far as domestic business is concerned, in terms of the top line, it is down from almost 124 crore to 65 crore, so down by about 45%. So as it is known, this is on account of unseasonal rains, and hence entire cooling industry, whether air cooling, air conditioner or fan, have registered the degrowth. So as of now, at a trade level, particularly at a dealer level, sentiments are low. But in the past, we have seen that once good summer sets in, and then everything settles automatically. So in this respect, we need to keep our finger crossed. But having said that, pain may spill over still few quarters. As far as inventory with the company is concerned, of course we are sitting on high inventory, but considering strong distributor sentiment, strong response from the distributors because of the brand and tax-savvy products, we expect our inventory to be monetized completely in a quarter or at the most in 2 quarters.
Mr. Shah, you're also suggesting that there can be pain felt in the remainder of this financial year as well, because considering quarter one is seasonally strong for a company like yours, which has not panned out so well. So what's the strategy that you're putting in place to at least, or if you could share with us, what are the internal targets where, so far the start of the year has not been that great?
See, now we need to really see our business in 3 parts. At a consolidated level, with acquisition of Climate Technology Australia, almost 40% of our top line is coming from rest of the world. Not only that, Australia being in southern hemisphere, its winter is our summer is their winter. Moreover, for Climate Technology, their 40% of the top line is coming from heating appliances. And on account of that, it will of course generate turnover as well as profitability around the year. Second component is about the centralized and ducted cooler, which of course is doing pretty well in North America. In India still it's a small pie, but in the medium to long term, we expect it to generate substantial business. And as far as residential air coolers are concerned, of course our focus is going to remain in respect of the tax-savvy products, innovative products, etc., and to always keep an edge over competition. And that will continue. But having said that, this time it has been back-to-back second bad summer, so it may take few quarters to set off the effect.
Okay. Mr. Shah, you spoke about the Australian acquisition. Could you tell us, Climate Technologies, what sort of numbers did they garner last year in terms of top line and bottom line, and what sort of margins do you get from the company like Climate?
Yeah. So Climate Technologies year end is 30th June, and in INR, its top line was about 275 crore, EBITDA close to 31 crore, its PAT was 23 crore. In current year, that is their accounting year 18-19, we expect that turnover to be in excess of 300 crore, EBITDA around 40 crore and PAT approximately 30 crore, which in terms of the ROCE will translate into close to 30% return on capital employed and return on ROCE approximately 20% and return on net worth close to 30%.
Right, Nrupesh, I just want to I have a question on your markets abroad, actually. I do believe that you have a substantial business in Australia as well. And, Australia, of course, is going to go into the summer months in November, December, January. Do you think that we can see a little bit of a recovery in the earnings as we move into those months from your markets abroad? Also, if you could give us an update on your Mexico and China markets.
Sure. So as far as climate technology is concerned, we completed its acquisition as on 38 June 18, and hence September quarter will be the first quarter post-acquisition in respect of the consolidation. So obviously on YOY basis, its top line and bottom line will be the pure addition. Not only that, we see that in climate technology down the line, there are many possibilities to improve its performance further, to cite few strategies. One, making its sourcing much more efficient, mainly on account of our ground presence in China. Secondly, it's having good dealer distribution network and market access in Australia and also United States. And they are not currently selling residential range of air coolers. So for our range of residential air coolers, it does provide market access. And in about 4 years' time, we expect climate technology to register a turnover of almost $80 million Australian currency-wise, which translates into top line in excess of 400 crore.
So 400 crore is something, Mr. Shah, that you're suggesting that you can get for the full year from climate technologies, right?
Climate technology in about 4 to 5 years.
In about 4 to 5 years. Just an indication, since you said September quarter will be the first one where you start putting in the numbers in your consolidated P&L account. What sort of initial start that can we see in terms of revenue from climate technologies in the September quarter?
Quarter-wise, it's very difficult to give a breakup, but as I said earlier, in the current accounting year...
Give me an indication for the entire FY19, what contribution can we expect from climate?
So, for accounting year 18-19, its year end is 38 June. So, we expect it to register top line in excess of 300 crore and bottom line of approx 30 crore and EBITDA of almost 40 crore.
All right, Nrupesh Shah, we'll leave it at that. Thank you so much for joining us and providing an outlook as well as an update on the quarter gone by. Of course, Symphony for now is, the stock is really under pressure right now, and it's down by as much as 16%. But the company is suggesting that a lot of these issues and challenges will get resolved over the next few quarters. And we watch out for the kind of aid that can come from its markets abroad. But for now, weak numbers from Symphony, and thereby you see that weakness in the price action as well. And with that, we're going to wrap on this edition of the F&O Show. But for more news and updates, stay tuned into Bloomberg Quint Live.